Welcome to The Explainer. I'm absolutely pumped to jump right into today's topic because we're looking at something that is literally reshaping one of the biggest companies on the planet. Today, we're breaking down Amazon's super aggressive 2026 push into robotics and AI logistics. We're going to look way past the standard headlines to see how these investments are fundamentally changing their fulfillment economics, rewriting their internal profit structures, and why, honestly, this might just be the most significant shift in Amazon's business model in over a decade. Let's get right into it.
So, let's start with the surface-level facts you've probably seen floating around the news. As we roll into 2026, Amazon is heavily, and I mean heavily, investing in its logistics network. We're talking billions of dollars pouring into advanced robotics, automation, and vastly smarter AI fulfillment systems. Now, on the surface, it's super easy to write this off as, just another giant tech company buying more tech to speed up deliveries. But if you look closely at the actual structure of the business, there's a much deeper story unfolding here.
Okay, so here's the big question we really need to tackle today. Is Amazon simply making logistics more efficient so we can all get our packages, an hour faster? Or are they actually attempting to turn their massive, traditionally super cost-heavy logistics network into a brand new profit engine for the AI era? Because if they're building the latter, well, that completely rewrites the long-term value of the entire company. It literally changes how Amazon makes money from the ground up.
Part 1. Beyond Faster Delivery, Changing Fulfillment Economics.
To really wrap our heads around what Amazon is doing, we have to stop just thinking about delivery speed and start looking at structural unit economics. Basically, what does it actually cost them to get that cardboard box to your front porch? We are actually seeing a historical decoupling happening right now. In Amazon's old model, logistics expansion was highly linear. It was heavily dependent on human expansion. More orders meant more revenue, sure, but it also meant building more physical warehouses, hiring thousands of more workers, and taking on massive new fulfillment costs. The costs just grew in lockstep with the revenue, but that's changing. In this new model, with AI and robotics stepping in, revenue growth is actually starting to outpace labor growth. Automation is absorbing that marginal expansion. Every new order doesn't automatically mean a new human hire anymore. Now, there is a strategic risk here, obviously. You're swapping out flexible human labor for massive upfront capital expenditures, heavy hardware that carries serious maintenance and depreciation risks. But the structural shift is undeniable.
And it's really important to get that this isn't just about dropping a few, cool-looking robots into a warehouse to replace human packers. What we're witnessing is a massive systemic shift. A total transition from manual fulfillment to an entirely AI-managed network. It touches literally everything. We're talking about AI managing the warehouse coordination systems, predicting and automating inventory movement, optimizing routes for delivery fleets in real time, and handling high-level fulfillment coordination, the whole shebang. It's basically becoming an end-to-end nervous system for their supply chain. Which leads me to ask you this critical question. If logistics scale massively, like if Amazon ships millions more packages next year, but their need for new labor and physical overhead slows down dramatically, what actually happens to the business? Think about the math for a second. If your top-line revenue keeps climbing, but the cost required to generate that revenue starts shrinking proportionally, you are fundamentally altering the financial DNA of the company.
Section 2. The Operating Leverage Shift.
This infrastructure shift isn't just about pinching a few pennies per package. It directly targets Amazon's profit ceilings through something called operating leverage. And if you're not familiar, operating leverage is simply a company's ability to increase revenue without a proportional increase in operational costs. When you have that, profit margins naturally expand. Now, historically, Amazon's retail side has had pretty notoriously low margins, right? Because running a massive fulfillment network is incredibly expensive. But if that fulfillment can scale through AI without needing proportional human labor, long-term margin expansion isn't just a possibility, it becomes a mathematical inevitability.
The trajectory of these costs makes the dynamics super clear in practice. While revenue steadily climbs upward, the old manual labor costs used to grow aggressively right alongside it, constantly eating away at those profits. But with the new AI logistics model, that cost trajectory is much, much flatter. It scales at a vastly lower rate. And that widening gap between the revenue growth and the AI cost growth, that represents pure expanding profit margin. It's wild. The AI robotics act as a structural fix to Amazon's historically expensive, low-margin retail fulfillment network.
Moving on to Section 3, AWS for the physical world, AI infrastructure.
Okay, to truly grasp the sheer scale of Amazon's ambition here, we kind of need to elevate our thinking. We need to compare this massive physical infrastructure shift to Amazon's massively successful digital counterpart, AWS, or Amazon Web Services. See, when most people think of AI right now, they think of digital infrastructure,
cloud computing, software, search engines, chatbots. That's where AI has traditionally lived. But what Amazon is doing now is aggressively applying AI to coordinate the physical infrastructure of the real world. Robotics, route optimization, warehouse coordination, global inventory movement. They're taking the immense computational power of AI and using it to move actual atoms, not just bits.
It's a huge parallel. Just as AWS became the foundational operating system for the digital world, powering, a huge chunk of the internet, this AI-managed warehouse and logistics coordination is quickly becoming a scalable operating system for physical commerce. And the more complex that logistics network gets, the higher the value of this AI system becomes. It represents a massive, incredibly durable competitive advantage that is going to be nearly impossible for any competitor to just replicate overnight.
Section 4. A brand new profit engine.
So, we've tracked the initial news of these robotics investments, looked at the changing unit economics, and seen the blueprint for this physical operating system. The absolute crucial takeaway here is that this hardware-heavy automation is no longer just a back-end support function. It is Amazon's new flywheel. By building this scalable physical operating system, Amazon enhances its entire ecosystem. It reinforces prime customer retention because the service gets undeniably better. It structurally lowers long-term fulfillment pressure. And most importantly, it elevates overall profit generation. This highly automated logistics network is evolving into an entirely new, system-wide engine for generating durable, long-term profit.
I want to leave you with this final provocative thought. Quote, "This may not just be an efficiency story anymore. It may be the beginning of a new long-term profit engine." Unquote. When you watch Amazon moving forward, don't just see a retailer buying robots to shave a few hours off of delivery time. See a company that is fundamentally rewriting the cost structure of physical commerce. Think about how this operating leverage is going to compound over the next decade. Really ask yourself, how does this shift our entire understanding of Amazon's true long-term value?
As always, please remember that this explainer is for educational and informational purposes only and does not constitute financial or investment advice. All investments involve risk, and you should always conduct your own research before making any investment decisions. Thank you so much for joining me today, and keep questioning the structures behind the headlines.